Alright, so in this video, we're going to talk about identifying your targets. Now, before we actually look for any trading opportunities, we need to know where we're targeting, right? We know that we found our trend direction. We know how to gauge trend direction by using the market flow aspects. So we use the trending structure. We know that this market is moving up. If we focus on the overall bigger picture of things, as we have been, GBP AUD, we're actually scaled in here on the 4-hour chart. So we use that overall analysis to know that we are going in an uptrend. We know that we want the market to go up considerably higher towards 1.930. So in the meantime then, we will be looking at the shorter term structure for trading opportunities. Now in this instance, we are continually forming higher highs and higher lows in this market, and I expect to continue to make new higher highs and higher lows. So we are sitting right now on a key level. Okay, a key level 1.80, a big rounded off key level. We've seen this one tap, two tap into that. And now we can pretty much assume that in fashion with the market, making these higher highs and higher lows, the market is ready to move up from here. So we know then we are in an uptrend. We know we're in an area of interest. We're sitting right on one of those rounded key levels. So where are we going to target? For my trades, I like to target previous areas of supply and demand. And I like to focus on key levels and rounded off levels in nice, supply zones, demand zones, and at the top of price imbalances. So looking at this market here on a 4-hour chart, I'll show you what I would be looking for as my targets. So we're forming that low point, and from a bounce from here, I would first of all be looking towards 1.830, which is going to be the high point of this move. So we're looking for price to trade into that supply zone there. I'd also, because of how prominent it is and because of how large the reaction out of it is and it's untested, more so be looking for this area at 1.840. So we can actually look for an additional 100 pips past that high point. Now, this one follows that idea of an imbalance, right? If you look, price never actually traded into that zone. We do still have the open space there, leaving this zone open. So I do believe that this one is going to fulfill, and I would say that that is probably going to be retested even if the market decides to fall. So these are two great targets for the trade. Now, I would be looking to buy from down here with a stop somewhere beneath this 1.80 key level, and we could then look to take the market higher into first of all this level, second of all this level. Now, something worth noting, because we're in an uptrend, we know that we're forming these higher highs, higher lows. Okay, higher high, higher low. Uh, what we're looking for now is the next higher high. Because we know that we're moving in the overall uptrend, as we learned from gauging trend direction on the higher time frames, we could take the market past these highs, right? We expect that the market could run significantly past these high points and continue higher. So what would I target then? Well, what I would do is actually scale back to past price action and find the unfilled high points. So the most previous high, the most obvious target point is this 1.870 level. So we know that's a big rounded key level and it leaves us 700 pips to our target, which for GBP AUD is a brilliant amount of pips to ride into. So this here, 1.700, is going to be that next target point. Now, I would actually look towards the range 1.700 to 1.6750. That is just that little supply zone right in there. And I would look for, even if we are going to react, chances are we are first of all going to flow into that older previous high. So for my profit targets, it really is as simple as just identifying previous supply and demand zones, previous structure high points in the market, and targeting those. Now, if I'm just currently looking for a quick pop up for the market to then potentially reverse, we can just target these levels. However, because we are in an uptrend and we expect the market to continue higher than these previous highs, we can actually then target the back tested the past price data high points. Okay, so we'll be looking here for around a 600 to 700 pip target overall, with these two targets along the way. So here is something important to note while we are here. When we take profits, we generally do so at multiple price levels. We don't actually look to hold a move all the way into our top target because we also, of course, know we have possible reversal points along the way. So as an example, say we are going to be putting 2% risk on this, we may look to take a quarter of the profits here, another quarter of the profits here, a quarter of the profits there, and then allow the final quarter of the profits to roll all the way into our take profit point. Now, what that's actually going to do is mean that if we tap this one and reverse, we still locked in some profits. If we tap this one and reverse, half the profits are secured. If we hit here and then reverse, 3/4 of all of our profits are secured. But if we do make it all the way to our profit target, we will have secured brilliant profits in 1, 2, 3/4 along the way, and then secured a full quarter of the position to the full profit target. So that is how I work with my targets. Now let's actually see how this market plays out. Right, so in this instance, we got a nice reaction straight through take profit 1 into take profit 2. At this point, half of our move would be off the table. We'd have secured half of the profits of the movement. Buying in from down here on this key level, we've already made a hefty profit into there and into there. So now we're running half of the original risk on the position. So we risked 2%. We're now holding 1% worth of the position, okay? 1% risk. Now, of course, by this point, as we will talk about very soon, the stop loss will be pushed past the entry point. So we spoke about this in the risk management section. And of course, when we begin to formulate setups at the end of this chapter, I will be talking about managing your stop. But for now, we know we are risk-free on 1% of the movement, and the other 1% has been locked in, and we've made some money on this trade. So the next movements now, we are looking for a push into 1.8500 and then respectively into 1.86750 to 1.870. And if we don't reach that point and we do come all the way back down to our entry, we've already locked some profits in. So there we go. Take profit 3, and 4, both fulfilled brilliantly. So that's how I identify my targets. I'm looking for previous zones, unmet zones, paired with key levels. Okay, so notice how all of my targets on this move are key levels: 1.83, 1.84, 1.85, and then 1.87 or even 1.8675. Okay, that's 750 level. So I'm always looking for key rounded levels, zeros, 250s, 500s, 750s, and that is what I want to see for my targets. So pairing supply and demand, price imbalances, and key levels is exactly how we will be finding our trade targets. So hopefully that has provided some good value to you. Hopefully now you understand how we go ahead and target price areas, the most accurate price areas to actually take profits upon. We are, of course, going to be taking profits in sections, as I just showed you. Now that avoids ruin when a trade runs really, really well and then turns around on you. You need to have multiple take profit areas so that you can shave profits off as you go. A clearly defined plan before you get into the trades like that. Okay, take a quarter here, a quarter here, a quarter here, and the final quarter at the top is going to do you wonders for actually building consistent compounded results rather than seeing a trade go parabolic and then completely turn around on you and leave you upset. So final checkpoint for this video then, nice and simple. First of all, supply and demand. Next, we want to focus on key levels to make sure that supply and demand zones that pair with key levels are our target areas for our target profit taking. We want to also focus on the imbalances, which really goes hand in hand with the supply and demand. If we've got a price imbalance left open, for example, when we were looking at this target here, but we see that there's a price imbalance open into this zone, well, that gives us a pretty clear idea that we're probably going to surpass this zone and go straight into here. And if you actually look at what price did, it did just that. We didn't even stall at this level because the price imbalance was unfilled, and until we actually traded into this area of supply, there was no resistance for the rollover. So do consider imbalances, because we could have potentially just boosted half of our profit taking to this point and saved cutting a quarter early. So supply and demand, key levels, and price imbalances, all hand in hand with the overall trending structure of the market, is exactly how we are going to target areas to take profits. So thank you for watching. Next video, we'll look at how you can identify entry points for trades. And then once we've done that, we'll be talking about stop losses, and we'll really get down to formulating the perfect setups.